Hey everyone, welcome back to Corporate Decoder, the place where we shine a light on the things companies would rather keep in the dark. Today we're diving into Flutter Entertainment PLC's latest report, and let's just say it involves some rather interesting news impacting gamers and punters, especially in the UK. So what is the big deal with this particular document? Well, it is a current report filed on Form 8K, and for Flutter Entertainment, it's all about dropping some significant news that affects their operations. Think of it as a public announcement of something important that just happened. Flutter Entertainment PLC is a big name in the online betting and gaming world, owning popular brands like FanDuel and Paddy Power. This report is about new gaming tax rules announced by the UK government. The company is essentially informing the public and regulators about changes to gaming taxes announced in the UK government's autumn budget. This is not just a small tweak. Changes in gaming taxes can have a pretty big impact on a company's profits because taxes are a direct cost. For Flutter, this could mean a higher or lower amount of money left over after they pay their taxes. The announcement was made through the Regulatory News Service in London, which is a standard way for publicly traded companies in the UK to share important news. Flutter is sharing this because they have to follow specific rules set by the United Kingdom Financial Conduct Authority. These rules are designed to make sure investors have fair and timely access to information that could affect the company's stock price. In simpler terms, they have to tell everyone what is going on, and they have to do it the right way. Now, usually these reports have a lot of financial tables and numbers to dig into, but this particular 8K filing is more focused on a specific event. We don't get profit and loss statements or balance sheets directly here. However, the core of this filing is about how changes in government policy, specifically tax policy, can directly impact the business. Flutter Entertainment's ordinary shares, which you can trade on the New York Stock Exchange under the ticker symbol FLUT, are the things that will feel the effects of these tax changes. This is critical because the bottom line profits of the company are directly tied to how much tax they pay. Let's think about what this means for Flutter. If gaming taxes go up, it can mean a couple of things. Either Flutter will have to absorb that cost, which would lower their profits, or they might try to pass that cost onto their customers by increasing prices, which could lead to fewer people placing bets. If taxes go down, it is the opposite, profits could increase, or they could lower prices to attract more customers. Because Flutter operates in highly competitive markets like the UK and the US, where FanDuel is a major player, these tax changes can really shift the landscape. They need to remain competitive while also managing their costs. Looking at this filing, the main takeaway is transparency and compliance. Flutter is doing what it is supposed to do by reporting this significant regulatory development. The impact on their financials isn't detailed in this particular document, but it is the underlying story that matters. Any investor in Flutter Entertainment PLC or anyone interested in the gaming industry needs to pay close attention to how these UK gaming tax changes will play out. It is a clear example of how external factors like government budgets and tax policies can create both risks and opportunities for large corporations. What is my take? Well, Flutter is a massive company with a diverse portfolio across different regions, which usually helps them weather storms in one specific market. The UK is a mature market, so changes in taxation there are always a significant factor. This report highlights that management is actively engaged with these regulatory changes and is communicating them promptly. The real story here isn't a financial number from a huge table, but the immediate impact that government policy can have on an entire industry. It shows that big companies are constantly navigating these external forces. For Flutter, a key strength is their diversified revenue streams from various markets. However, a notable risk always remains regulatory changes, especially in the highly scrutinized gaming sector. This report directly signals such a risk. We will be watching closely to see how Flutter implements any necessary adjustments to their business strategy and pricing in response to these new UK gaming tax rules. Alright, that is our quick look at this Flutter Entertainment filing. What do you think these UK gaming tax changes will mean for the company and for players? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more in-depth analysis. And don't forget to join our Discord community linked in the description for even more insights and discussions. Thanks for watching, and we'll see you in the next one.